Most traders ask, what is price action? Some say it's candlestick patterns. Others think it's chart magic. But the truth is, price action is far more powerful and detailed than a lot of traders perceived it to be. My name is Juliet, and this is FinSpoke channel. Let me explain bit by bit what price action is. Now, before you jump out, make sure to check the description below for timestamp so you can quickly find the exact part of this video that attends to your curiosity, answers your question, and fits your trading style. Also, look out for the part 2 of this video. Let's go. In this video, you will learn everything about price action for trading crypto, stock, forex, indices, or any other financial market. And by the end of this video, you will not only become a better trader, you will be equipped with multiple price action tools to further improve your trading skills. What you will learn. 1. What is price action? Price action is one of the tools in trading that a lot of traders have a wrong perception about. But in this video, you are going to get the right perception and how it works. Number 2, important candlestick patterns and formations. If you can understand candlestick patterns and formations, it will not just improve your entries, but it will help you to exit the trade at the right place and at the right time without giving back the market what it gave to you. Number 3, price action plus support and resistance. Here you learn how, when combine price action with support and resistance, how you can get a good entry position. And also, you will learn what makes a support and resistance to hold or not to hold. And when I said that, I mean the validity of a support and a resistance zone. Then number 4, price action breakout trading strategy. Now, this is the easiest and the fastest way of making money in trading if you understand how it works. And that is what I will walk you through step by step in this video. Let's get into it. What is price action? Price action is not about memorizing patterns or drawing too many lines on the chart. Price action is the real-time movement of price that shows the battle between buyers and sellers. It's about reading the current behavior of price through its movement. In fact, price action is how the price is moving now. The keyword there is now, which is the present. So this is when we zoom in on the chart to know what the current candle is doing or what the last couple of candles is doing. For example, look at this chart. You can see that the way price reacted here is quite different from the way price reacted here and the way it reacted here as well. So price action is not about finding your resistance zone or your support zone. It is about knowing what price is currently doing or what the candle has done previously. Look at the reactions here and also look at the reactions here. You will understand that these 5 points, all of them are different reactions. And this is what we call price action. So the true meaning of price action is about understanding the little details on how price is reacting and use these details to make a quality trading decisions. That is what price action is all about. Now, when we try to compare price action with the market structure, now it will interest you to know that price action is micro in nature, while market structure is macro. As a trader, you should understand what I mean by market structure. But in case you do not know what market structure is, or you don't understand, or you have forgotten what market structure is, watch this video here. I made a comprehensive video on understanding market structure. So watch the video. And if you are struggling to get it right or make consistent profit, or when you make profit, the market will collect it back from you, you might want to join my WhatsApp group. I will leave the link in the description. We don't make noise. We produce results if you let us in. So what the micro and macro means in this scenario is that price action being micro means we zoom in and pay attention to these small details. These small details, what the candle is doing. We zoom into the chart and we pay attention to it and use it to make a quality decisions. Remember, it is a quality decision that you make in trading that makes you profit. And the market structure being macro means when we look at the swing highs, swing lows, swing highs, swing lows, things like that. The resistance, the support, breaking of the structure, and all of those things. So do well to go watch that video from beginning to the end. You will understand how market structure works. Now that we have the right perception of what price action is, it is time to learn the important candlestick patterns and formations. Just a quick and a little definition. Candlestick patterns are one or multiple candlesticks that shows price reversal or price continuations. Take a look at this chart. Now, this is a reversal candlestick chart pattern. Looking at this, price was pushing up and it get to this place and it start moving down. Look at this first candle, second candle, and this momentum candle. We'll talk about momentum later in this video. So it is a reversal because price gets to this place. Price gets to this level and it turned. Instead of going up, it started moving down. That is why it is a reversal chart pattern or a reversal candlestick pattern. Then look at this scenario again. This is a continuation candlestick pattern. Now, in this case, price pushed down. Although it ranged here, but it pushed back and started coming down again. So this is a continuation. This is a continuation candlestick chart pattern. It is a continuation because it gets to this place. It did not return back to where it was coming from. After ranging, it started coming down. It continued to its direction, which is to the downside. So in reversal, what price does is it changed from, in this case, in this particular scenario, it changed from moving up and start moving down. That is why we say it's a reversal and at the key level. And in the continuation pattern, it pushed down, a little pause to rest, or what we might call a little pullback, and it continued to its direction without changing the direction. As a smart price action trader, you should know that understanding candlestick chart pattern is very important. If we say that price action is getting details of what price is doing, then that's exactly what we have identified in this chart. Next is the candlestick formation. We are going to look at some few important candlesticks because this video is actually part 1 of this best price action. In the part 2 of this best price action, that's the completion of the video, I'm going to discuss more candlestick formations, including other key points there. So if you watch this video, do well to watch to the end, and also be expectant to watch when I release the second video, to watch the completion of this video. These two candlesticks are some of the candles that a wise price action trader should know what it means when it appears on a chart at some levels. Let me begin with the hammer. Now, this hammer is a single candlestick. The color can either be green or red. It doesn't really matter, depending on what you have on your chart as the color of your candlestick. However, you must understand a few rules about this hammer candle for proper identification. Usually, a candlestick has 5 segments. They open, they close, they high, they low, and the body. That's what makes up a full candlestick. Now, for hammer that has a green color or a bullish color, it opened here, closed here, and this is the highest price gets to. This is the lowest price gets to before it is being pushed to this level. A hammer can have little or no wick, but to the downside, you want to see the wick, this wick, you want to see this wick to be 2 times or 3 times of the body of the hammer. In identifying this hammer, you want to look for it in a support area, in a support zone, or in a demand zone. That's where we want to look for this hammer. If you want to use it, it can appear anywhere in the chart, but where it is valid is when it appears at the support level. Now, this is a bullish reversal candlestick pattern. In other words, the appearance of hammer in a chart at the support level reverses price to the upside. Next is this shooting star. The shooting star is a bearish reversal candlestick pattern. You will see it at the resistance level. Doesn't matter the color, whether it's green or red, it doesn't really matter. Now, the body, you have the body, the wick, you can have the lower wick, it may or may not be there, it doesn't change anything. Then the upper wick, you want to see the upper wick to be 3 or 4 times the body of the shooting star. It is a candlestick that comes to tell you that price has reversed from bullish to bearish. You should pay attention to these two candlesticks. They form in a chart very often. Let's identify a hammer in a chart. Zooming out, you can see a hammer inside this box. Here, the color is red, but it didn't stop anything. You can see that appearance of this price reverse and started moving to the upside. And this is a shooting star in this chart. And you can see that price was formally coming to the upside. The appearance of this shooting star, price started going down. So the appearance of shooting star come to push price to the downside, while appearance of hammer come to push price to the upside. These two candlesticks, the hammer and the shooting stars, appears very often in the market, and they provide a very good signal for both bullish and bearish trading opportunities. Doji candlestick pattern. This is another important candlestick pattern I want you guys to learn as a price action trader. In the family of doji, we have different types of this candlestick. However, the important part of doji is that it opens and closes almost at the same level. But the question is, what information is the candlestick telling us? Classic doji signifies indecision in the market. And remember that where we pay more attention, all of these candlesticks can appear anywhere on the chart. But where we pay much attention to it is when it appears at the key levels, like when it appears at the support level or at the resistance level. That is when we pay much attention to know the information that it is passing to us. Now, when you see this classic doji, it signifies indecisions in the market. When you see this long leg doji, it signifies uncertainty in the market. Now, the long leg doji can be bearish or it can be bullish, depending on where the body open and close. For instance, the body of this particular one opens and closes here. It signifies a bullish long leg doji. If the body is to open around here and close around here, then we say that it is a bearish long leg doji candlestick. Next is dragon fly doji. Now this is a bullish reversal signal. Expect to see it at the support level. For more accurate information, the next one is gravestone bearish reversal. Like we said, is bearish reversal. So you expect to see this candlestick at the end of an uptrend at the resistance zone, while you see this dragonfly doji at the end of a downtrend at the support level. It simply means that the downtrend has come to an end and the momentum is shifting to the bullish or to the uptrend, while the gravestone is telling you that the uptrend has come to an end, the market is reversing to the bearish or to the downside. Now, this is four price doji. I don't know if any of you have seen this type of candlestick. It's rare in the chart. I've seen it severally, but it's rare. Now, what it means is neutral, undecided. Price open and close without making any movement. So you can take a screenshot of this. When you see all of this, you'll be able to know the information that it is communicating to you. Now that we have learned about the doji candlestick, and that brings us to this momentum candle. A momentum candle is a single candle, just as you can see in this chart, with a full or real body that is usually more than twice the size of the previous ones, as you can see here. And what does this momentum means? The moment you start seeing a candle like this, what it simply means is that there is an increased volume, there's an increased strength. It shows strength in the market. If price is pushing down, in this case, what it means is that sellers have power and control, or the selling pressure is high or strong. And if it is in the case of price moving to the upside, it means that the buying pressure is high. In other words, we have more volume in the market. That's what it means. Like I promised, I am going to talk more about volume in the part 2 of this video that is dropping soon. Do well to watch it till the end. So what this momentum candle tells us is that there is strength and the pressure in the direction that the market is going. Having studied these candlestick formations, the next thing we want to look at is price action combined with support and resistance. So we want to combine these price actions, these candle formations, with the support and resistance to see how we make a quality decisions in the market. Let's look at support and resistance. Now we said that support and resistance are key price levels on the chart where price reacts and it's likely to reverse. You may want to look at every support and resistance as potential support and resistance. This is because it's not all the time that the resistance will hold, and it is not also all the time that the support will hold. At some point, you see the break at the support level and equally see a break at the resistance level. Your edge as a smart price action trader is to identify or get more insight when you combine price action with support and resistance to get more insight on the support or resistance level that is likely to hold and the one that is likely to break. If you are able to identify a resistance that is able to hold, it will help you to take a short trade and ride it to the support zone. And if you are able to identify a resistance level that will not hold, it will help you to take a long trade. And if you are already in that trade, it will help you to manage your trade very well. So the combination of support and resistance with price action provides you with deeper insight into the strength of these levels at every point in time. When you want to combine the price action with the support or resistance level, there are some certain things you need to know to be able to identify whether the level is going to hold or not. If the level holds, you should be able to know what to do. That is your edge. And if it didn't hold, you should also know what to do. That is your edge. So we said that points to bear in mind when identifying the support or resistance level that is likely to hold or break. Now, the first thing to bear in mind is to look out for momentum candles moving into and away from the support or resistance levels. It signals strength. The level is likely to hold. When there is strength and the momentum, that particular level is likely to hold. Don't get confused. We will see it inside the chart right away. Then the second point to bear in mind is look out for the creation of lower high when the price is approaching the support level and the higher low when the price is approaching the resistance level. In other words, for price to be making lower high, that means you should be able to see lower high, lower low, lower high, lower low. And for price to be able to make higher low, that means the price has to create a higher high in order to create a higher low. So look out for these things. What it means is that if you see the lower high at the support level, it means signs of weakness at that support level. That support level is likely to break. That means a continuation. And if you see a lower and if you see a higher low, when approaching the resistance levels, it means sign of weakness. That resistance level is likely to break. Now, what is these things all about? Your edge for having this clue or knowledge is when the price hold at the support level, you will take a buy and ride it to the next resistance zone. And when price hold at the resistance level, you will take a short position, that is a sell, and ride it to the support level. Now, when the price break a support level, it means a continuation to the downtrend. So you are going to enter a short position to continue the movement. And when the price breaks a resistance level, it means a continuation to the upside. So you are going to enter a buy position and continue the movement. That is your edge for having this information. Kindly go to the comment section if you have gained value in this video so far. Go to the comment section and say thank you. Yes, go and tell me thank you so that I will be able to bring more and more insights that will drive in dollars into your wallet. Let's get to the charts. Now, this is a resistance zone and this is a support zone. If you look very well, you will see some of the candlesticks that we talked about. You can see that price came here and was rejected. You can also see a shooting star. A shooting star appeared here and also appeared here, and price pushed down to this level. You can also see a hammer here. So when you have these informations and you see this, all things being equal, you enter your buy position and you close with profit. And if you look at this one as well, you also see a shooting star here. It pushed price to this level and it came to this level. There was a rejection or a reaction. It didn't get to this my marking actually, but it was close to that support level. So it reacted and it gets to this place again. That's more or less a pullback. Get to this place and still give us another hammer and it push to the upside. When price is approaching a particular level, either a support level or a resistance level, and it starts crawling like this, be sure that the possibility of the price breaking this level to move to the downside is always there. Now let's identify when price is not likely to hold on a resistance level, as in this case. Now I said one of the things I say you should look out for, one is momentum candle, which is this. Then secondly, I say look out for the price when it's approaching the level, creating a higher low. For price to create a higher low, that means there is a higher high. So price come here and gave us a low, a high, a low, a high, a low, and finally shoot up. This is what price did here and eventually break the level. Again, if you really understand how chart patterns works, you can also see that when you grab your trend line tool, you put the line and you can see that price formed ascending triangle chart pattern, which is a continuation chart pattern to the upside. So when you look at this, you can see that once we have this ascending triangle, the possibility of price breaking the resistance level is always there. So your advantage of having this knowledge is for you to position yourself and take a trade. A trade that you entered around this zone, you can see what happened in the next couple of weeks. So these are the signs when price wants to break a certain level. Now that we have this information, Let's look at price action with breakout trading. Now, looking at the price action with a breakout trading, we are also going to look out for to say that this is a good breakout and what to look out for in order to confirm that this one is a fake out or a fake breakout. So, while trying to combine the price action with breakout in the market in order to get a good trade, we need to look out for some certain things in order to confirm the breakout. Usually we have two types of breakouts. The one that we call the good breakout and the one that we call the fake breakout, which is fake out. In the case of a good breakout, we want to see signs like this. First, increase momentum in the market. We've discussed about momentum candle. So you see increased momentum in the market. The second one is that you want to see a strong candle close above in the case of a resistance level or below in the case of a support level with a body. When the candle close above that level, it must close with a body, not a wick. Then number three is that there must be increased volume. That's activities means more money into the market. So there must be increased volume in order to push the price. Then the next one is that that level must be an obvious key level. It must be a visible level that everybody knows that that place is either a resistance level or a support level. And the fifth point is that there should be a price action confirmation. Having said that, you also want to know signs to identify a fake breakout or a fake out. The first one is that there's a decrease or smaller momentum in the market. The second one is that the candles become weak. So when they want to close above or below, they will close with a wick, not a body. Next is that there's no volume in the market. As the fourth one, the level is minor, it's not clearly visible. There's no price action confirmation. So traders, you can screenshot and make good use of it. Why do you have this knowledge? When you know what to expect for a breakout to hold, you'll be able to position yourself in order to get a good trade. And when you know what to expect, when a breakout is a fake one, you also position yourself to take advantage of that fake out. You may not see all of them in a fake breakout or in a good breakout. But my point is, the higher the point, the stronger the breakout. This is a perfect example of what we've discussed so far. Here there is a momentum to show you or to signal you that something is going to happen. You can also see a momentum here. When price formally break this place, it is more or less equal to the level where I put the line. Then next, what did it do? It finally broke the level here with a body and now push up with a momentum candle. Again, we talked about price creating higher low when it wants to break the resistance level. You can equally see it that this is a structure was broken here. For a structure to be broken, that means we are going to get a higher low and a higher high. And here, it gave us a low again and actually gave us a low here before it take out this level and continue to move. You may want to rewatch this video for proper understanding. And don't forget to watch the part 2 of this video that is dropping soonest. We have more detailed, eye-opening informations. So go grab it and watch it the moment it drops. Thank you for watching. If you find this video helpful, if the information I provided here has helped you, please drop a comment and like this video. It means a lot to me. And this is how we use price action to get a plus setup, combining with support and resistance. Understand what the candlestick tells you trading the breakouts or the fake outs, and lots more.